Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on Nasdaq. The NDX has been the barometer for U.S. large-cap growth and also one of the best-performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this Wednesday afternoon, we have McCormack. He's the factor and core equity strategist at Invesco to discuss Nasdaq-100 weekly performance. It will also take a look at what's going on with VOLQ and who has been outperforming within the index. Ryan, it's great to see you as always, and we saw a bit of volatility come back this Monday to kick off the week.
Yeah, we sure did, Jill. A tough week for stocks all around. QQQ down 2.3%. The S&P down right around 2%. S&P 500 value down 1.9%, give or take. So nowhere really to hide. I think most of the worry centered around Evergrande. They weighed on the markets. You can see a spike in the volatility readings, whether it be VOLQ, which is 30-day implied volatility for Nasdaq-100, the VXN and VIX, which is SIBO. They all three readings spiked, but then you could see they retreated. So since the initial shock, markets have largely taken the news in stride. I think it was helped by the People's Bank of China bringing that liquidity injection on Friday. And beyond that, you've seen the worries for contagion largely subsiding. Most anticipate some restructuring of Evergrande's debt. Yesterday, it was announced that the onshore property unit is going to make its interest payment for a 2025 bond tomorrow. And that payment was negotiated with bondholders. But the vast majority of attention this week and frankly for the year has been on the Fed. So I've got a bunch of stuff from the statement, from the Q&A, largely, expected. We saw a little bit of a bump up in the dot plot. So 9 officials are calling for a rate hike next year. That makes the committee evenly split 9 and 9. That number is up from 7 that were anticipating a rate hike back in the June meeting. They talk about progress towards their employment and inflation goals continuing broadly as expected. The committee also mentioned that the pace of asset purchases, that asset purchases may soon begin. It seems as though from the statement in Powell's Q&A that November is the likely target for tapering to begin. They talk about no decisions on the appropriate pace, but they did kind of look at middle of next year for end of tapering. So I think the read through there is potential tapering beginning in November for around 8 months. They reiterated that as long as the recovery remains on track, gradual tapering process that concludes around the middle of next year. So that's where that eight month figure comes in. They talk about substantial further progress, right, on both the inflation and the job market goals. Inflation, it's already been hit. So Powell's mentioned the supply bottlenecks. They may be with us for a couple more months and into next year. Inflation projections for this year were marked up. PCE is up to 4.2% this year. That's up from 3.4. Core PCE at 3.7, up from 3. So you've seen some upward revision in inflation. It looks like employment or substantial progress on the employment side is the thing that's needed. And we're starting to see that progress, right? You have initial jobless claims coming in at 400,000 for 14 of the last 16 weeks. Put that in perspective, claims had been over 400,000 per week for the previous 62 weeks before that. Last week, we talked about the continuing claims number and the expiration of some of those jobless benefits. On Thursday, it hit a 12-month low for the week ended at September 4th at 2.665 million. That's the lowest level since March 20th, 2020. And again, from the Q&A, Powell noted that the demand for labor is very strong, addressed some of the slowdown that we saw in August, particularly in pandemic-sensitive industries, virus fears, childcare issues continuing to weigh on employment, but could see some rapid gains in employment as virus efforts to contain the virus continue. So, I think largely you start to look at it, probably a rate hike next year, tapering beginning at some point next year. Kind of the first look of 2024 economic projections came out today. GDP at around 2%, unemployment at 3.5%, PCE as well as core PCE right around 2.1%. So it looks like maybe a kind of a slowing of the economy back to that 2% GDP rate. Without that absence of growth could lend itself to some decent performance within growth-oriented strategies. much like QQQ and the Nasdaq-100.
Right, and let's talk about the Nasdaq-100 for a moment when we take a look at sector performance, because we typically talk about information services and technology leading the way, but we saw a reversal, Wednesday to Wednesday with our industrials and materials, those types of sectors leading the index.
Yeah, I think because there was really nowhere to hide, right? When there's red across the board, the overweight sectors are going to detract from performance, and this was no exception. Tech, discretionary communication services dragged it lower. Those sectors where QQQ does not have exposure or is underweight relative to the S&P 500, they kind of aided relative performance because QQQ did not have that negative performance. One thing I just want to highlight is the fact that healthcare was the only sector in the green, mainly or largely driven by the top performer CGen, up nearly 10% on the week. It's not held in the S&P 500, so another one of those differentiated holdings. CGen's cervical cancer drug Tivdak received accelerated FDA approval, which is their fourth approved drug. So some movement in the healthcare industry, but for the most part, red. You look today and yesterday, we've seen more green on the board. So we'll hope that continues into next week.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.